What's going on YouTube? It's Ben. Hey, thanks for checking out my channel once again, you guys. If you're a subscriber, I really thank you for subscribing. If you're not already, definitely hit the sub button down below. And if you like any of my content in this video, please smash that like button. I would truly appreciate you for doing so. In true fashion, let's get right into it. I wanted to talk about taxes today, one of the most exciting subjects ever in the world, but let's get right into it. So for 2018, I paid a tax bill of $32,000. So how does that work? Why did I pay $32,000 and why you might have to pay $32,000 or more when starting a recruiting agency? So from the time period of July 2018 to December 31st of 2018, that's when I started my recruiting agency. That is the first 6 months of my work and my only staffing work for 2018. So I made $136,000 during that time period. Previous to that, I worked a corporate slave job for 6 months for the first part of 2018 and making about $50,000 a year. And so for the first 6 months, I collected half of that, which is $25,000. Now, if I add $136,000 plus $25,000, I'm sitting right around $155,000 in total gross revenue earned for 2018. So in a corporate job, they take the taxes out for you and then they give you your check. Normally they overpay your taxes, and so at the end of the year they give you a credit. You get a return of $2,500 or $3,000, normally some measly amount of money. In business, it's much, much different. So in business, you collect 100% of your revenue upfront, pre-tax, and you can essentially have all of it in your hands at once without Uncle Sam putting their finger on it at all. That's why you need to be mindful, and that's why I'm doing this video. So essentially, let's assume for purposes of someone watching this starting a recruiting agency that you're going to make anywhere between $100,000 and $120,000 or so. Effectively, that puts you in a tax bracket of 25%, meaning if you work with a client and you charge them $1,000 and you receive a check for $1,000, you should assume that you're going to be taxed at 25%, meaning you should put away $250 into a tax account that you just set aside and don't touch, don't look at, don't think about, because you're going to owe that to Uncle Sam at the end of the year. Just so it turns out that 25% of my $136,000 earnings plus the $25,000 that I made on W-2 with the credits and how it worked after deductions and everything landed me at a tax bill of $32,000. Now, does that make me upset? No, not at all. Honestly, it doesn't. I would much rather pay Uncle Sam $32,000 than collect a measly $2,500 or $3,000 check that I would go blow on something stupid or just throw it in the bank account and have a ton more revenue that I've collected by running my recruiting agency and have a ton more cash in the bank regardless, no matter what. No matter how you slice the math, anyone paying higher taxes is still making a bunch more money than someone working a corporate job for somebody else at the top who's making much, much more money. So I paid $32,000. Deduction-wise, I wanted to let you know how things work. So when you run a recruiting agency, or any business for that matter, you are allowed to take what are called deductions. And I hope I'm not preaching to the choir here. Maybe you already know this, but you can deduct basically anything and everything that you conduct business with. So the camera I'm literally shooting this video on right now is a $1,000 camera. That was deducted. The lighting that I'm utilizing for this video, that was deducted. My laptop that I utilize, which is $1,300, that's deducted. My cell phone, my internet bill, my home office gets a credit. I have so many credits that it added up to about $16,000 in deductions, which means it takes it off of your actual income. So my $136,000 income turned into basically $120,000 in income on paper, which lowered my tax burden. It didn't lower it that much because I still paid $32,000 in taxes. However, there are many, many clever ways to go around this. And for 2019, I've actually restructured my company to become what's called an S Corp. And so you need to do a lot of research when you get into business, but becoming an S Corp basically allows you to become what's called an employee-owner, which essentially lets you give yourself a salary so that you get taxed only on your salary, and then you only pay federal income tax on all your revenue, meaning everything you make from your clients. So I'm kind of going in the weeds on there. I know that's super boring, and I'm not going to explain all of that because I'm not a tax professional. And full disclosure, all of this is just my own personal experience, and it's not any CPA advice at all. So contact your local CPA. And if you're in Seattle, I have a great one for a recommendation. But at any rate, I just wanted to let you guys know that business is a whole new level. And, it's not just getting a $2,500 return at the end of the year. You're actually owing money. And the whole game is how can you deduct or show a loss enough to the point where you lower your tax burden to the lowest level possible. And for me, I was only able to do that to the tune of $32,000. And so at the end of the day, that really doesn't mean squat to me because I'm quite happy with my earnings that I'm sitting on, and quite happy with the fact that I have started a recruiting agency that did $136,000 in revenue in 6 months, which I plan on tripling, quadrupling. So that's a little bit on my taxes. It was kind of a shock to see that I paid $32,000 to Uncle Sam. But nonetheless, I'm still happy as I can be for having the opportunity. And, it's much, much better than living in any other country where taxes are way different and way more outrageous. And it's extremely hard to get up and running and off the ground. And we live in the best country in the world for tax policy. So whatever your opinion on taxes are, tax the rich, tax the poor, whatever, blah, blah, blah. I'm just saying that getting into business, you need to understand what you're looking at and how much you're going to probably have to pay at the end of the year. So check that out. That's all I've got here, guys, for Tuesday. I will absolutely come at you with a video on Wednesday. We've got some really cool ideas planned out that are going to be very, very practical to staffing and recruiting. And so I'm going to make that video later on today, edit it, have it up tomorrow morning, and I will catch you guys on Wednesday. Take care.